the election, investors have been so excited about the companies that do better in an accelerated economy that aside from a few very high-profile examples, they pretty much ignored the good things that are happening at the kind of secular growth companies that get less of a boost from faster GDP growth, which is exactly what this market's expecting from Trump's agenda. Let me give you a perfect example. It's a company called Box. It's a cloud-based enterprise storage provider / mobile business collaborative platform that reported a terrific quarter at the end of November. Company beat on the top and bottom lines, also raised its full-year guidance for 2017. Looks pretty close to profitability. It's got a giant customer base with more than 31 million users, growing sales at a 31% clip. And while it's still not profitable, that's because they prefer to invest in order to continue expanding the business. Doesn't that sound like the Salesforce.com model that we like so much? But here's the thing. Since Box reported that strong quarter a little more than a month ago, its stock has actually come down more than 4%, even as the broader market rocketed higher. And look, at these levels, Box is now trading at 14 and change, only a few nickels and dimes above where it came public a few years ago. Well, it was 1 year ago at 14 bucks even. So is this a viable pullback? Or do we need to be concerned that the Wall Street fashion show may have turned its back on this kind of stock? Let's take a closer look with Aaron Levie. He's the co-founder, chairman, and CEO of Box. Learn more about how his company's doing, where it's headed. Aaron, welcome back to the show.
Hey, Jim. Thanks a lot for having me.
Okay, so this was a breakout quarter. You did more than $100 million in revenues. That's the trajectory we want. You got a lot of customers. And yet at the same time, we know that the market seems to like these companies that benefit from a Trump agenda. So what does Box do to be able to either participate in that or does it just keep doing its own thing and hope one day people recognize it?
Well, I think, irrespective of a Trump agenda for a second, if you think about how complex the world is getting for businesses, there's an increase in cybersecurity threats. There's a tremendous amount of regulation that businesses have to deal with. There's global collaboration issues. So when you think about all of that complexity, we provide a platform that simplifies how companies can work, share, and collaborate on their information in a very secure way. So we've seen growth under lots of different types of administrations, and we believe that we're on a trajectory to continue to grow rapidly in the future.
I've read through a lot of the interviews that people have had with you, and the one thing that we've lacked is an example of why Box has a customer, what the customer wants from Box, how Box got it, and why that customer is not anxious to shift to a competitor. Could you walk me through an example?
Sure. So we have 69,000 customers globally. We're definitely the biggest platform in this space serving enterprises. We're in 63% of the Fortune 500. So companies like Pfizer, General Electric, and many others use Box. One great example is a company like AstraZeneca, so a global pharmaceutical company. When you think about how much data they have to manage and share across everything from R&D teams to marketing teams to sales and finance, they have tremendous amounts of data across their tens of thousands of employees, and they leverage Box to be able to securely manage that information and allow their employees to be able to collaborate with partners, with clients, with vendors, all across the world. And so we are the only company that can do that in a very secure fashion while ensuring that end users get a great end user experience at the same time. And so we're going after a $30 to $40 billion market that is moving from legacy systems to the cloud. Just like Salesforce.com took over Siebel and legacy CRM companies, we were doing the same thing in content management and collaboration.
Okay, so let's say Valley's kind of interesting. You've got Google partnership, IBM as a partnership, but let's take a company like Oracle. I mean, Oracle, they see who's doing well, and they decide, you know what, we're going to turn off the oxygen. How do we know that they don't look at Box and say, you know what, we came after Workday, we've been winning. We are going to own Box's space. What makes it so that Larry Ellison, Mark Hurd, and Sofracats can't just say, Box is done?
Well, we've been in this space now over 11 years. We've built the only platform that can scale to meet the world's largest organizations as well as the end user use cases that we go after. And that's not necessarily the strong suit of traditional enterprise software companies. Further, we actually partner with most of the traditional incumbents in this market. So we have an incredible partnership with IBM. We have a great partnership with Microsoft. As you mentioned, we partner with Google. And so we would actually hope to do the same thing with Oracle to be able to integrate across their ERP system and some of their other modern applications. So we would actually see Oracle over time as more of a complementary platform that we can integrate with as opposed to a competitor.
Sometimes I worry that when you show profitability, which I think to me when I look at it could be only a quarter or two away, that we're at least free cash flow positive in a way that could be explosive. If I were IBM, if I were Google, the stock says 12, 13, 14. I bid 16. I say, hey, Aaron, nice to meet you. And you got to sell.
Well, we believe that we're going after a pretty massive industry, and we would think that $16, as an example, would dramatically underrepresent the opportunity that we have in front of us. So we're certainly, really shooting for the stars on this one, and this is our mission is to dominate this industry by building the only platform that can serve every enterprise on the planet. So we have a large amount of growth ahead of us that we're very, very confident we're going to be able to achieve.
All right. In the last minute I have, I can't afford you are a very active blogger. And you did say something in your 11/9 post-election memo to employers. You said, I'm hopeful that over the coming weeks and months, we'll start to see a very different style from the president-elect. Some of the ideas that were proposed in the campaign cycle would be disastrous if put into action, and I'm confident they will not come to pass. So far, this president-elect has been pretty true to the campaign president. Should we be more concerned if we work in high tech, if we work at Box, if we're business people? What do you say?
Well, that was especially that note was especially specifically referring to many of the social issues that we care about as a company, and really being able to drive a community that can create innovation, going forward. I think that so far we haven't seen anything at a policy level that would be challenging to innovation and innovative companies. And obviously, Trump welcomed in a number of tech leaders that I think they had a good exchange around what the future could look like. But we are paying very close attention to certainly the situation. We do want to find constructive ways to work with the new administration. But in general, there's no stopping the amount of progress and the amount of innovation that's happening in the future. And our job at Box is to make sure that we build a platform that can really serve every enterprise on the planet going forward.
All right, I should ask this because Facebook is flying today. Working there, Facebook Enterprise sounds like something big?
Yeah, so they have a new product called Workplace by Facebook, and it's exactly what you'd imagine it to be. It's a version of Facebook that works in the enterprise, so you can communicate and connect to coworkers and employees. We are partnering with Facebook to deliver content and the files that are stored in Box securely in the Facebook environment. And so as more and more applications start entering the enterprise in the future, cloud applications, Box is going to be the central back end for managing the content and the files that then link into those applications. So no matter how fragmented an IT environment gets in the future, customers can have one single place to be able to manage their information. That's our value proposition, and that's why we have 69,000 customers on the platform.
Well, I've been thinking that the stock at $1.8 billion just makes no sense. It should be much bigger, particularly with the run rate you have. I always love to see you because you've got a great vision. Aaron Levie, the co-founder, chairman, and CEO of Box.
Thanks,
Good to see you, sir. Well, $14, I don't know. I mean, I think that there's a lot good here that's not reflected in a $14 stock. Mad Money's back in. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.